Joining us right now to talk about where Wall Street is, the markets, and maybe get some reaction to what President Trump had to say to Joe. James Gorman is here. He's the CEO of Morgan Stanley. It feels, and I don't know if we should think that Davos is the contra-indicator, but people are quite happy. And people are quite happy with President Trump, by the way, too.
You know, it's hard not to be happy with the economy. I mean, we've got 50-year low unemployment rates in the U.S. The global growth has held up. The Fed, instead of raising rates, has been cutting rates through 2019. The market's at a record high. I mean, if this is a hard crowd, right, because it's a big echo chamber. So if the first person coming in is unhappy, then that kind of bleeds the pool. But no, it's very positive, and I think for good cause.
To the extent you worry about anything, what would it be? This is usually a hand-wringing kind of place. You know, I think you've got to worry about long-term. China's economy is slowing. Has been for some time, and that will inevitably impact global growth and impact China. So against the backdrop of the tariff deal, which I'm glad we got a deal, right? That's a worry. Clearly, what's going on in the Middle East, it's almost like a second Arab Spring coming through in Lebanon and Iran. I think that the Middle East has been, in our lifetime, it's been a problem, from decade to decade. But that's a worry. Listen, the markets are expensive, but the economy's doing well. So do I worry about that? I'm not excessively. We've had a lot of people, whether it's David Tepper or Ray Dalio or Paul Tudor Jones. There's sort of a sense of just buy with both hands right now. Yeah. Buy the market with both hands. Yeah, I don't like buying. When everybody's buying with both hands, you generally want to sell. Right. So what are we supposed to make of this?
Tepper's not everybody. You're talking about Mike Wilson again. Tepper's not. That's one of your strategists. Tepper's not everybody. Yeah, he's not Mike Wilson.
Yeah. We have a diversity of opinion, Joe, at our shop.
Yeah, obviously. Who gets the good ones and who gets the bad ones?
Yeah, the public gets to listen to everybody, make their own decisions.
Both, so they don't know what the hell to do.
It's all information.
No, but the point was, actually, in talking to Tepper, was that we had an endless parade of sell-side analysts that work for firms like yours that a lot of times spend more of their time making sure they're not going to be wrong one way or the other. And all the sell-side guys were talking about, we're looking at maybe mid-single digits for the next year. Yeah. So not everyone's buying. I would say that was against the consensus to say that after all we've seen, I'm expecting a lot more. So I don't think I disagree that shows that everyone's buying at this point. I think these two guys, but they did, Druckenmiller as well, both said, I mean, they are ready for any sign at this point to maybe slow the horse down and get off.
Well, you want to be. I mean, we're 10 years into it, and by these cycles, there's no book that says thou shalt last that long before a recession. But historically, recessions have come about every 7 years. It's a 15% probability every year. Not in Australia, but Australia has a unique advantage, which is it's very close to China, and China buys a lot of Australian dirt.
And kangaroos.
So it's
wallabies.
It's a good situation down there. But no, listen, I'm not. I wouldn't be buying. To my point, I'm not buying with both hands, if that's the question. But it's very hard to fight this market.
Well, that's the question. I mean,
earnings are going up at the same PE multiple. By definition, stock prices are going up. One of the things I've said over the years, probably on this show, is I'm always surprised why people are surprised the market is at an all-time high. In a global economy that is growing, by definition, corporate earnings are growing. Unless you cut the multiple, the market should finish logically every single day at an all-time high. Now, it doesn't, of course, but if you stand back from the market 10, 20 feet from a chart, it looks like a straight line from bottom left to top right.
A big part of the reason that those who are optimistic about the stock market right now is that they point to what the Fed's doing. The Fed changed course so dramatically just over a year ago with lower interest rates. Obviously, that presents its own challenges for the banks who have to live with those lower interest rates. But where do you kind of see the Fed heading this year? Do you see them changing that?
I'd be very surprised if there's action this year. You'd need for them to reverse and raise rates. I think would be catastrophic in this scenario, given where sentiment is, given we're in election year. To keep cutting rates and moving towards negative interest rates is obviously extremely unattractive. So I think the Fed has enormous self-interest in playing out this economic strength with rates at historically low levels. QE's been feeding the economy. I mean, there's no compelling reason to keep cutting at this point.
What do you make of bank company valuations like your own?
Well, a little better than I felt 2 weeks ago, actually, because our stock's up 10%.
But that wasn't strictly a function of earnings. That was a function of guidance, right?
It's a function of our annual strategic review, where we lay out what we think we can do in a normalized environment over the next 2 to 4 years short term, 2 years, and then longer term. Listen, banks have been the unloved sector of the last couple of years, and that will turn, and I think it's starting to turn. Bank value, historically, I always thought you sold banks at 2.5 times book and you bought them at 1.25. Post-crisis, with the new capital levels, those ratios dropped. But we were trading at 1 times book at 0.9 book a month ago, 0.9 book. And we just came off record earnings. How is this possible? So the banks have been undervalued, and you'll see a lot of movement, I think, in all the bank stocks.
You get a little frustrated with their analyst on the earnings call, on the most recent earnings call. I think you called them the kids in the back seat.
No, I made a little joke. You see, I was one of 10 children. My dad had a huge Dodge Phoenix, and when we went to our family's place in the Outback, we'd all sit in the back seat. There's like 7 kids in the back seat, my mum and dad and one of the older ones in the front. And, we keep saying, Dad, are we there yet? We there yet? And he'd say, just shut up, And it was a little bit like, have you reached your goals yet? Do you reach them? Yeah, we kind of did. So relax a little bit.
Do you imagine?
Got to have a little fun on these calls. I've done a lot of them.
Yeah.
Do you imagine there'll ever be consolidation again at the top of where firms like yours are?
I think for G-SIFIs to merge with G-SIFIs, that's a heavy lift. And I don't see that happening. I mean, certainly in this country, I can't speak. Some other regions of the world, you could argue there's actually compelling sort of industrial logic for it. In the US, it's hard to argue. But, within the G-SIFIs, there are very, very large banks and large banks. There's huge difference in size. So some of those can and should be growing. And you're seeing below that, the BB&T SunTrust deal as an example, TD Ameritrade and Schwab as an example. There are transactions happening because it's expensive to run these businesses. The technology, the cyber prevention, managing data privacy, all of these issues, they all cost money. And people always move to where you've got scale economics.
Do you think that the U.S. banks are behind relative to the European banks, relative to even China and these platforms? I'm thinking of Ant Financial and what's happening there. It's a sort of spectacular success story. And, what's going on in China in the banking world relative to what's going on, I mean, it's like we are like 100 years behind. It feels that way.
Yeah, I think that's a little harsh. I mean, you could argue the core banking sector, the regulated large banks in this country, are ahead of the Chinese banks. There's certainly historically been more independent of the government. So I think, the fact that Ant Financial has done well, look at Schwab and Ameritrade. I mean, there are great digital and direct players in this country that have done phenomenally well. Some of the online lenders are doing it. Some of the payment systems, the Venmos, the Squares. So I don't think of us as behind. No.
One of the other big themes here at Davos, and we've been sort of batting it around for the past 2 days, is this idea of sustainability and the Larry Fink letter and what Microsoft's doing. Everybody's coming out with some kind of plan around sustainability and how that is or is not going to change business, and whether it's real or whether it's virtue signaling and marketing. Where do you come down?
It's a bit of both. I mean, the reality is, in my opinion, what's gone on with climate change. I mean, just being an Australian and watching what's happening down there, a bigger part of Australia than the size of Switzerland is just burnt. I mean, 1 billion animals and wildlife have been destroyed. It's pretty historic. I mean, I grew up in a country where you had bushfires every 10 years, but there was nothing like this. And it's obviously all over the world. So listen, I'm not a scientist, but it's kind of hard to argue with the facts that the globe is warming right now and that man is contributing.
Well, you could argue that was the cause of the brush fires, though. I mean, it's 0.8 of a degree Celsius in the last 100 years. So you can't attribute every single adverse weather event.
No,
there hasn't been management of the land down there that was burning. How many were set? How much arson was involved? Were there 200 fires that were set down there, James? How many?
Yeah, but Joe, I started my career as a lawyer in Australia working on the 1983 bushfires, which were the most damaging in the country's history.
In a 4 billion-year-old planet, you know for sure that these are unprecedented, what you saw in the last 30 years?
I'm not going to debate climate change with you, but I certainly think facts are suggestive that the planet is warming.
I don't think that
and I think it's a good thing we're having the conversation.
Between the brush fires and climate change, that's a tenuous link at this point. I mean, and the floods in India and okay.
A brave person wouldn't make some linkage between those, but you're a brave man.
James Gorman, thank you for being here.
My pleasure.
Appreciate it. Great conversation.